Once you overcome this one mistake 90% of traders make, you will finally become profitable. On my 7-year journey as a trader, I failed for years. I blew up multiple trading accounts. I kept breaking my rules, and every time I told myself I would change my trading, all it took was one losing trade and I would go back to revenge trading. That was until I finally mastered human conditioning. In this video, I'm going to share how to beat the mental game of trading, and I'll share all the lessons I've learned in the last 7 years that helped me become a profitable trader. So the reason 90% of traders fail is because of human conditioning. And even for me, it took me years of failure to become profitable. This is because I kept losing even with a system that I knew was profitable. But if we fast forward to today, you can see these are regulated broker statements from Interactive Broker. This was a $50,000 trading month for me, and right below it, this is a 2022 statement, which was almost 3 years ago. And this was also a $100,000 month. So I've been consistently profitable, making over 6 figures a month for the last 3 years. But the real question is, how was I able to do this, and how was I able to master human conditioning? Well, in this video, I'm going to explain exactly how I overcame my own mind to become a consistent trader using 7 simple steps. By the end of the video, you will learn how to beat the mental game of trading. In this video, what we're going to do is talk about the 7 traps that every single trader has gone through at one point in their career. And therefore, it is important that you overcome every single one and understand how to solve them when they do arise in your trading journey. Each one of these traps will build upon each other. So trap 1 will build upon trap 2, trap 3, trap 4. And then by the end of the video, when we get to trap 7, which is going to be the most important to tie everything together, you will have a very clear roadmap to understand exactly how to overcome your mind for consistent profitability. So what is trap number 1? Well, first we need to understand how the human brain works. Your brain is actually wired for survival. This is the first and most important thing that you have to understand. When we're trading, there's 3 ways our brain tells us to actually look at the problem that we have or the trade that's presenting itself. We have a survival state, an emotional state, and an executive state. Now, within all 3 of these different components, our brain will react in a different way. And therefore, it is important that we understand what each of these states are and how we can overcome each one to actually see consistency. So, like I said, we have the survival state, the emotional state, and the calm and prepared state. How do all 3 of these compare, and what can we do to actually see more consistency? Well, first, let's talk about the survival state that your brain goes through. This specifically happens when you lose. The second you lose a trade, you start asking one simple question, and that is, am I safe? As humans, one of the most important things we look for is safety. This could be job security, financial security, or just physical security as well. We always want to ensure that we're safe so then we can have a longer and happier life. It's that simple. But in trading, the second you lose, you start asking yourself this question, but in different terms, such as, will I lose more money? Should I exit this trade even though it hit my stop loss? And you can't think straight after you lose because now your brain is going back into that survival state. And then on top of that, you start thinking, how can I make this back? Because now you're in survival mode and you know you need to make that money back to actually be a consistent trader. So rather than actually looking at the trades properly and executing based off of a proven system, now all of a sudden you're in survival mode looking to make your money back as fast as possible rather than using your proven systems over a long period of time. And because of this, you will slowly bleed out your account because you can't focus on one setup. All you're focusing on is the safety that the money in trading is giving you. Now, this is similar to being in an emotional state as well. Once you lose and you do start thinking about if you're going to make that money back and how you can make that money back, you'll start revenge trading. This is when you completely get rid of your system and your strategy, but you're just looking to make that previous loss back. And in this emotional state, you'll start asking yourself, will I ever make the money back? I need to win. So rather than looking at your normal A+ setups, now you're just looking at any setup to enter just to make your money back because you need to win. You're very emotional after losing that first trade. And this is when you start telling yourself, all I need is one more trade. If I get one more trade and I win, I'll stop trading for the day. But in reality, you will continue to trade, and the more trades you take that are out of your system, you're simply gambling, and all this will do is make you blow up your account or lose more money faster than you would if you just followed one proven and simple system. And finally, we have the third state, and this is where we want to be. This is when you're completely calm and prepared for the market. This is where profitable trading takes place. This is where when you do lose, you ask yourself the question, how can I learn from my loss? What did I do wrong? How can I actually use this to my advantage and learn a lesson rather than trying to make the money back? You don't try to enter another trade just for the sake of money, but rather you tell yourself, now, even though you lost that first trade, you need to follow your plan consistently, because you know trading is not a short-term game. We want to look for the long-term consistent results in trading. So you know when you're calm and prepared that all you need to do is follow one proven system and you need to follow your plan. And if you do lose, then you simply walk away. You don't sit there for hours and hours trying to continuously trade. You know you're not in the right headspace and you may go back to being emotional, so you simply walk away from the day because you always have tomorrow to trade as long as you can preserve your capital. In trading, the traders that are the most profitable stayed in the game longer than traders who simply came in looking to make money. You need to fall in love with the process of being a consistent trader. You need to fall in love with your plan and your proven system. This is why I always talk about why simplicity is key in trading. And if you don't have a profitable system just yet, wait until the following steps and we'll talk about how to create that proven system with the right mentality. So when you're in the survival or emotional state, this is where 90% of traders trade. And this is why they lose money consistently, because they can't think logically. They're thinking based off of emotion and fear. And this is the fastest way to blow up your account or lose money. Only 10% of traders can consistently be calm and prepared for the markets. And this is the state that we want to be in. By the end of the video, we'll learn exactly how to always be in this calm and prepared state and how to mitigate the survival and emotional aspects of trading that humans are naturally drawn to. Now, here's trap number 2, and this is fearing losing more than winning. If you're watching this video, this is something you can definitely relate to, where you simply won't enter a trade because you feared that you're going to lose the trade, and this thought of losing scares you more than actually trying to win a trade. The reason this happens is because when you take a loss, this will trigger your fight or flight mode. I want to ask you a very simple question. When you enter trades, do you all of a sudden start shaking because you entered a trade? Or do you notice your heartbeat start increasing when you start entering a trade and you just feel more anxiety? This usually occurs when you enter a trade and you have too much size or too much money, meaning if you are a brand new trader and you should only be trading with a couple $100s, you're looking to enter into thousands of dollars of positions just so you can make money faster. But in reality, all this does is make you lose money quicker, and therefore you're stressed out the second you enter the trade and you can't think straight anymore. This will make you have irrational decisions based off of the two states that we talked about earlier. So like I said, every single trap in this video builds upon each other. So far, we've talked about that emotional and survival state. And when you fear losing more than winning, the only decisions you're going to make now is going to be based off emotion and survival. And we already talked about why we don't want to do that. But because you're in this survival mode, now you're going to start hesitating on high quality setups. Have you ever seen a high probability setup? In this example, let's just say we're using the break and retest. This is a system that I teach on my channel that you can watch for free. And we look for a breakout and then the retest back into a support level. This is an A+ setup, but because now your decisions are based off of emotion and survival, you're going to hesitate on this. Even when you see buyers stepping in, you still won't enter because you fear losing too much. You think, what if the stock theoretically goes back down? But in reality, when that stock goes all the way back up into your profit target, just like you originally planned, but you hesitated on this high quality setup, well, now not only are you at a higher emotional state than before, but you also left money on the table and you lost a good opportunity to trade. And what 90% of traders will do once they see this is, let's say that stock continued to move up, now they're just going to randomly buy in. So when they had that low risk, high probability setup, that is an A+ setup, they didn't enter. But now, because they fear that the trade's going to go higher, they enter into the trade near a resistance level and end up losing the trade. So now, not only did you not make money on the good trade that you were supposed to take, you actually ended up breaking your rules as well, and now you ended up losing money. And because you did this, you will continuously fear losing more than winning. So we have to understand that when we see a high probability setup, we don't want to think based off of flight or fight. We don't want our heartbeat to increase or start feeling anxiety just when we see a trade. We want to stay calm and patient for the trade to truly set up. And when we see it, we have to enter that high quality trade. Now, step 3 builds upon step 2, and that is the question, is trading a 50-50 game? We know there are only 2 outcomes when you enter a trade, and that is the trade will either win or you will lose. But if there's only truly 2 outcomes, then why do we hesitate on our entries? Why are we so scared? Because technically we should win 50% of the time and we should lose 50% of the time. But for us, when we trade, that just doesn't seem to happen. In reality, it seems like our win rate is much, much lower. So why is that? Each trade that you take is an independent event. It doesn't rely on the previous event. So if I use the example of a dice right here, well, if I told you I wanted to roll the number 1 on this dice, there is a 1 in 6 chance that I'm going to roll that number 1. So if I take 6 rolls of this dice, does this mean that there's going to be a 100% chance of me rolling that number 1? No, because even though I did 6 rolls and there's a 1 in 6 chance, that doesn't mean that every time I roll, the previous number gets eliminated. So theoretically, if I roll 6 times, let's say on the first one, I get a number 4, on the second one, I get a number 3, on the third one, I get a number 2. This doesn't mean that all of these numbers will now get eliminated. These numbers have the same 1 out of 6 chance of showing up every single time. It's the same thing when we're looking at a coin. A coin has a 50-50 chance of landing on either heads or tails. And in between this 50-50 chance, it doesn't mean that if I roll this 10 times, I'm guaranteed going to get 5 heads and 5 tails. I could get 7 heads and 3 tails. The point I'm trying to make is that in trading, the previous trade has no correlation with the new trade. So even if your win rate's 50%, 60%, or 90%, it doesn't mean just because you lost the previous 5 trades or you lost the previous 10 trades that you're guaranteed going to win that 11th trade. It is all an independent event and the previous trade does not matter. And because of this, what you need to understand with trading, the more data we have, the more accurate our system becomes. In this example, let's assume we still have that 50% win rate that we talked about earlier. Well, if we take 10 trades and we win 3 trades, but we lose 7, this gives us a 30% win rate. So when new traders come in and they trade a specific strategy or system and they see this lower win rate, well, they're just going to jump over to the next strategy and they're going to look for the new holy grail or a higher win rate system. But what they don't understand is they only did this based off of a 10 trade data size. You need to have multiple points of data to truly understand your system. And therefore, if we take this up to 100 trades, well, now you can see we won 53 trades and we lost lost 47. This gives us a 53% win rate. So this is in fact 3% higher than our projected 50% win rate. This is why more data and more trades is what you need when you're trying to become consistent. And therefore, when you lose in the short term, especially if you're a new trader and you're trying different systems, it's not the strategy that's not working. It's you not being patient enough to actually test the strategy over hundreds, if not thousands of trades to truly see if you have a proven edge in the markets. Now, like I mentioned, I'm going to give you a systematic and profitable system near the end of this video. But right now, what you need to understand is the patience it requires to build a proven and profitable system. Trap number 4, you want reward without the pain. Right now, if you think about your specific life, you are most likely used to fixed rewards. What does this mean? Well, let's think about your job or work. Or if you're in school, we can also use this example. When you're looking at both of these things, how do you get rewarded? Well, you get rewarded by putting in more time. The more time you put in, the better rewards you get. So if you're getting paid $10 an hour at your job, what does this mean? Well, for 5 hours of work, you'll make $50. But if you increase that 5 hours to 10 hours, well, now all of a sudden you'll make $100 with the same fixed $10 that you're making per hour, but you increased the hard work that you were putting in. Therefore, the more time you put in, the better your reward got or the final product got. But if we look at trading, you are not paid for your time. Rather, you're paid for decisions. In this trade here, you can see this was a 1 hour day in total. We started trading at about 9:30. The final contract scale was at about 10:30. And this was an $11,000 trade by simply trading a profitable system and making the decision to enter into this high quality setup. Just because you're sitting in front of a chart for hours a day, you're not going to get paid more. You can make the same amount of money in 1 hour that you'll make in 7 hours sitting in front of the chart. But in trading, we get paid for our decisions when we see high probability setups form. We don't get paid for sitting in front of the markets from market open to market close. And therefore, for me, I only trade for the first 2 hours every morning. I don't trade more than 2 hours. I trade from 9:30 a.m. Eastern to 11 a.m. Eastern, and then I can go enjoy the rest of my day with my friends, family, or do other things that don't revolve around me sitting in front of the charts. This is something you need to ingrain in the back of your head. More time does not mean better rewards in trading. In reality, the less time you spend on the charts, but the right decisions you make on the chart is how you make the most money, which is not the traditional way of making money, but this is how you need to rewire your brain. Now, as we talk about rewiring our brains, trap number 5, bad habits build fast and they compound. As the human mind has evolved over the years, one thing that is very clear is we pick up negative things faster than we pick up positive things. And therefore, when we're building our habits, it takes 67 days to truly build a habit. And these are some of the negative habits that I see traders building the fastest because they don't understand that they're building them. And therefore, I'm going to talk about how to mitigate each and every single one of these. You won't make the same mistakes as 90% of traders. So the 4 habits we'll talk about is over trading, over leveraging, being impatient, and most importantly, fear of missing out on trades. So let's go over to over trading. This means that you're always forcing profits or trades when nothing is clear. Most likely, this also will occur when you're revenge trading. When you already lost a trade for the day and now you're looking to make that money back, so you're over trading, trying to just make up those profits. Well, the end result of this is you'll lose 10 times more than you originally planned. If your max daily risk is $100, so you can't lose more than $100 a day, well, now when you're over trading and you're not thinking properly, because like we talked about in step 1, you don't have that calm and prepared mindset, well, now all of a sudden you just lost $1,000, which is 10x more than you were originally planning to lose because you couldn't keep yourself calm, patient, and you couldn't walk away from the screen. So it is very important that you do not overtrade so you don't lose more money quicker. Number 2 is over leveraging. This is what happens when you want to make big money as fast as possible. When you want to make more money, what is the first thing that comes to your head? Well, let's go in with more size. And this is where I see traders start to full pour. They'll see a good high probability setup, and it may even be their A+ setup, so they full pour their whole trade. All the money they have in their account, they'll put it behind this, because if they can double their money, well, then they'll stop. But they just really want to double their money first. And what does this result in? Well, the first thing you have to understand is even if it's an A+ setup, you can still lose. An A+ setup simply means it's high probability and it's in your system. But even if you win that first trade, well, now you just built the habit that you can overtrade and over leverage. And because of this, it takes one bad losing day and you over leveraging and over trading, and you can blow your entire account in 1 to 3 trades. And therefore, it is very important that we do not over leverage on our trades and we do not over trade either, because in trading, the longer we stay, like we talked about in this game, the more higher probability chance of us making more money. But we can only do that if we preserve our capital the right way. Number 3 is impatience. This happens when you don't want to be a profitable trader. When you're impatient and you're just looking for trades, you don't really care about being a profitable trader. You just want money, and you want money today. And I'm sorry to break it to you, trading is not a get rich quick scheme. There's a lot of traders online that portray trading as get rich quick, but in reality, it is the exact opposite. It took me years to truly learn and develop my system. Now, that doesn't mean it has to take you years, but you're not going to become rich overnight through trading. You need to go through the trials and tribulations and learn what it does take to become profitable. And if you have the right guidance along the way, can you make the journey a little bit faster? For sure. But that doesn't mean that we're looking to take $100 and turn it into $1 million. We want to slowly compound our account and our skills over time, because the more we can compound our skills and become a better trader, the more efficiently we'll make much more money trading, simply based off of the skill that we've learned. Number 4, fear of missing out. And this is something a lot of traders can relate to. You see a trade going up and you think if you don't enter this one big trade, you may miss the biggest trade of the year. This could run 500 or 1000% to the upside. So you just need to make sure that you're in the biggest trade of the year. But what happens? That trade was never in your system. You were never supposed to take that trade. So now all of a sudden, because you had this fear of missing out, you broke your plan, you took that trade. And even if you won the first trade that you broke your plan for, maybe you even won the second trade that you broke your plan for, the more you build up this habit that you keep breaking your plan just because you fear you're missing out on money, well, the more this is going to affect your trading long term, because we know if we follow one proven system consistently, we'll slowly compound our account like we've talked about today. However, if we don't follow our system, we're gambling. So yes, your account may look good just because you're taking these gambling trades and winning, but the one time it doesn't work and you don't have a system, you'll lose all of those profits. And I've seen so many traders do this. I've seen this happen recently with crypto. I've seen this happen with trades that ran 500,000%. The trader will be up hundreds of thousands of dollars, but because they have no plan, they don't know when to sell, they don't know when to exit out, all of a sudden, even though they had $100,000, they'll end up at zero because they never truly had a profitable system. They kept breaking their plan, over trading, and getting lucky in the short term, which we know doesn't work out if you want to be a consistent trader. Trap number 6, and remember, we're getting to the 7th step, which is going to be extremely important as well. You make decisions through ego, not logic. Now, you may be thinking to yourself, I'm a very calm person, I don't have an ego, I'm very humble, but the reality is every single person has an ego one way or another. The only thing that differentiates ego is how you show it. But for most traders, your ego does ruin your trading. This is because you want to win trades just to prove you're smart. When I first started trading, I was still a teenager at the time. And therefore in school, I always had really good grades. Therefore, I always thought I was a little bit smarter when it came to the technical part of trading. But when I kept losing trades trade after trade after trade, all of a sudden my ego starts taking a hit and I start thinking, am I even smart enough to trade? Why do I keep losing? And then I would start taking trades that I would think would win. Even if a trade started setting up in my system, but I thought it could theoretically lose, I didn't take it because I only wanted to take winning trades to prove that I was smart. But in reality, you have to understand in trading that doesn't matter. Let me show you two examples. Now, on the left side here, you can see a 92% win rate, and on the right side, you see a 47% win rate. On the left side, this trader tried to get this 92% win rate. You can see they only lost one trade and they were very, very cautious about their actual win rate compared to how much money they were making. Whereas on the right side, this trader only had a 47% win rate. So they definitely lost more trades than they won. But at the end of the month, this trader made $30,000 and this trader made $30,000 as well. So both traders walked out of the month profitable, but why was that? Well, this is because though your win rate does matter in trading and you want to have a consistent win rate, what's more important is your risk management. So the reason I was losing trades in the beginning was because I didn't understand risk management and win rate. I was looking for these higher risk to reward trades, meaning I was looking for $500 of profit for every $100 of risk that I was putting on. This is what this 1 to 5 means. And therefore my win rate was extremely low. Even if I won 10 to 20% of trades, I would still be profitable. I just wasn't doing that because this risk to reward, especially as a newer trader, is harder to obtain. So what did I do? I balanced my risk to reward because trading is truly all a probability game. You don't want to aim for the highest win rate, but you don't want to aim for the highest risk to reward either. And therefore I balance mine out. So for me, I look for a 1 to 2 risk to reward. And this simply means for every $100 that I'm willing to lose, I want to make $200 of profit. And if we move over here to the right, this means even with the 40% win rate, I will be profitable if I follow my system. I don't need to win every single trade. I just need to make sure that my risk to reward is over that 2R and I'll still make money. I've talked about this in previous videos. My win rate sits somewhere between that 50 to 60% over a 3-year period with that 2R multiple. But if we come back up to these actual examples, you can see with the 47% win rate, that's lower than a coin flip, but because the profit factor was so high, they still made the same profit at the end of the month. And this is exactly why just because you lose a trade, you're not dumb, but just because you win a trade, you're not smart either. It is simply the market's probabilities that are playing out. But as a trader, our only job is to be in front of the high probability setups to give us a better edge to make money. And finally, step 7, how to truly master yourself to become profitable. Based off of everything we've talked about in this video, these are going to be the exact steps that you need to do to beat the mental game of trading. So step 1, create a clear trading plan that you follow every single day. Now, if you don't have one, don't worry. What I want you to do is subscribe to the channel and wait for next week's video. Tuesday, June 17th at 5 p.m. Eastern, I am going to be releasing a full 10-hour plus course on how to start day trading as a complete beginner. We will cover everything that you need to know as a trader, and this is truly going to be the one video that will help you see more consistency as a trader. So make sure to subscribe, have your notifications on, and also if you gotten value in this video so far, make sure to leave it a like as well. Step number 2, walk away when you feel your emotions kicking in. When you start feeling anxious or panicky when you're in trades, that simply means you either have too much size or now you're looking to overtrade. So when you feel those emotions kicking in and you're not in that calm and present mindset that we've talked about earlier, simply walk away from the trade. There will always be tomorrow to trade if you have capital. But if you run out of capital just because you let your emotions get the best of you, well, then you won't be in this game long term. Step number 3, focus on small winners to build confidence. As a trader, we're here for the long term. We're looking to slowly compound our skills. If you're on a losing streak, or if you're starting the day, look for small winners winners to start off the day to give you that calm and present mindset. And this doesn't have to be a big trade, but it's simply about building your confidence to consistently take these high probability setups every single time. Step number 4. Stay calm and journal how you felt in every trade. Sometimes when you take a winning trade, you may have been really anxious in that trade, but because you won in your journaling system, you're just like, all right, that was a good day. Let me continue forward. But if you actually journal how you felt every single trade, you'll start picking up key information about your own psychology that you'll be able to fix only through the data that you see over a long period of time through your winning trades and your losing trades. Finally, if you've gotten to this point in the video, what I want you to do next, there's going to be a free playlist in the link in the description. And now that you've mastered your psychology, well, you're going to need a profitable strategy, profitable rules to follow every single time to consistently execute your strategy. And most importantly, you'll need to understand how the market works and functions to become profitable. And all these videos are in the playlist in the description that you can watch for free. And if you got value from this video, make sure to leave a like. If you have any questions, put them in the comments down below, and I will catch you next week with a full free course on how to become a consistent trader.